Hello everyone, welcome back to my channel. I'm your host Mrs. KK and this is The Wave. I know I've been gone for some times, but I'm trying to be back. Having a baby and filming is such a challenging job because there's always going to be background noise in the house, either from the baby waking up or from the people generally just in the house. So today I've just decided to come and sit in the car and do this quick video ahead of the deadline for the income tax, which is 30 June 2024. So remember, your tax year ends at the end of February each year. Then you have between February and June to submit your return without incurring any penalties. Thereafter, you can start incurring late payment penalties if you have any amount that is due, and late submission if there's any penalties that are due. But I want to clarify a few things. One, the importance of a payee 5 and what you should be doing it as an employee when you are submitting your return. Remember, if you are a salaried employee or else remaining the same, you shouldn't be having a top-up unless you have things outside your employment that your employer didn't consider. So employers are required to submit the amount of pay and remuneration they paid you during the year, and that information is pre-populated in your return. So when you are submitting your return to ITIS, you must take the payee 5 that your employer has given you and compare it with what is pre-populated on ITIS. You must compare it amount for amount. If you see any discrepancy, meaning whatever is on your payee 5 doesn't agree with what is pre-populated on ITIS, please don't submit. Go back to your employer so that the employer can help you resolve the differences between your payee 5 and the information that is pre-populated on ITIS. If there's any discrepancy, they will either have to correct your payee 5 or they'll have to correct the submission they made to NAMRA in order for your information to pull correctly. So that's number one. Please make sure that you are doing that comparison. Number two, make sure that you are getting your tax certificate outside your employment. This is often applicable to people that have retirement annuity outside employment. If you perhaps have study policies outside your employment, you must be lodging those ones on ITIS in order for you to be able to get a refund, because if you have retirement annuities and study policies outside your employment that your employer didn't consider when they are calculating your payee during the year, it means that you would have paid more tax than what you should, and that is what is going to be putting you into a refundable position. Most importantly, remember that when you are paying study policies, often a lot of us in the Black community, we will pay for study policies for nieces, for nephews, for stepkids, and for cousins. But remember, the Act specifically says a child or a stepchild. So if you are paying for a study policy for your niece and nephew and you have claimed it, you are actually at risk of NAMRA discovering that and them clawing back that refund that they've paid you. I've heard of an instances where someone was told to pay back the money because they were able to claim a tax refund for a study policy they held for a nephew. So the Act is very strict. It says stepchild or a child. So if you have anything outside your kids or your stepkids, you cannot claim those. The other thing that I wanted to highlight here is car allowances and subsistence allowance. I've also had a recent case where someone has a tax payable on ITIS, and when I looked into their tax affairs, they had a travel allowance, but they didn't have any expenses against that is being deducted. So often, most employers, when they pay you S&T or when they pay you a vehicle allowance, they assume you're going to spend that money on business expenses, and the onus is on you to make sure that you keep receipts of money that you're spending on your subsistence allowance, to keep receipts of the money that you're spending on fuel, your car maintenance, so that when you go and submit your tax return, you then put in those amounts as expenses and you keep proof, so that when you're going to be audited, NAMRA can then come and inspect the supporting document. Failure to do so, they will tax that, because most employer don't tax S&T. But if you don't have actual expenses to deduct against that S&T, it will unfortunately trigger your tax liability and you have to pay NAMRA at the end of the return period. So I wanted to highlight that specifically. Then I also dealt with a case where I was coaching someone and they were just uncomfortable with the fact that they have to pay NAMRA when they changed employment. And when you are changing employment, it's very important that your new employer puts you in the right bracket, because remember, when you've worked for two employers, your new employer might put you in the bracket when they calculate the new salary over the remaining period. But you mustn't forget that you had another employer in the same year. So technically speaking, you should be combining those two income to determine in which tax bracket you end up at. Because if you are taxed in the wrong bracket, the onus is going to be on you to top up that tax liability that is due. So when you are changing employment, be comfortable that you are being taxed in the right bracket. Most finance people are competent, they will be able to do this. But I've had to deal with an instance where someone changed employment and the new employer under withheld tax. Now the onus is on the employee to be able to make the top up, and sometimes those cash flow can really be draining. So make sure that when you are switching employment, you are looking in which tax bracket you should be falling. And finally, I want to make this video very short because it's just an improper video. The whole thing of tax relief that was announced. So I think in the budget speech, the minister announced that they're going to be upping the tax bracket so that they can give employees a tax relief, and many people didn't understand what a tax relief is. So the tax relief is really just aimed at leaving more money in the consumer's pocket. So previously in Namibia, if you earned anything above 50,000, you are going to be taxed. But with the tax relief that they want to bring in, they want to up the bracket to say everyone that earns at least 100,000, those are the people that start paying tax. So if you earn between 50 and 100,000, you would have previously paid tax, but now with the new amendments, you are not going to be paying tax. But we must remember that what was announced in the budget speech is a proposal. So that law still needs to go to parliament, it still needs to be passed, and then only employers can start applying that. So what I'm getting is people are assuming that maybe it's going to be backdated depending on how the law is passed. And because of that, you might have to be refunded for the fact that you would have paid more tax at the beginning of the year. But most importantly, what you need to remember is NAMRA will never refund you if you don't have your taxes up to date. So you guys that are in the brackets where you are affected, you need to make sure that your tax affairs are in order so that should you be needing a refund because they are going to backdate this proposal, then you are in a position where your tax affairs are fresh and you can get your refund when it's going to be paid out. So really, these are some of the mini, reminders I wanted to put out there on tax. I'm going to be doing a lot of content around a tax ahead of the tax season. I'm going to be answering some of the questions, especially just around how to pull your returns, to see whether you have outstanding returns, how to check how much you owe the receiver, how to check, or NAMRA nowadays, how to check if NAMRA owes you money, etc. So let's engage in the comment section if you have any specific question on tax, and I will answer them. Until next time, it is goodbye. I hope this video is my return to creating content. Until next time, bye-bye.